the people who got into Bitcoin early and who are telling the people who are getting in now and who have gotten in recently to never sell their Bitcoin, they're selling their Bitcoin to these people. This is a huge pump and dump. That's really what Bitcoin is. And they got Wall Street involved, and now they've got the politicians, they've got the government involved. It really is a shame that the politicians have sold out like this. And Wall Street, what else do you expect, right? Wall Street's going to do anything if it makes them money, right? They don't give a damn if the people buying all these Bitcoin ETFs ultimately lose all their money. All they care about is how many the fees that they make, right? Like the casinos, they don't care that the people in the casinos are gambling and losing. They're winning. The house is winning. But at least the casinos, they give you a nice show. They got pretty girls. They give you free drinks. And it's entertaining losing your money, playing, these games.
You're watching Capital Cosm. My name is Danny, and today's guest is the one and only Peter Schiff. Peter, thank you so much for coming on.
Oh, my pleasure. Thanks for having me on.
Yeah, definitely. Let's just dive right in, Peter. What is the top story for you right now? What is front and center for you, radar screen wise?
Well, I think right now we're seeing a little glimpse of what's to come with respect to Donald Trump and the Republicans, or the Doge, the fake Department of Government Efficiency. When you're seeing this breakdown right now in the ranks of the Republican Party, you have a lot of Republicans who want more debt, more spending. In fact, you had the overwhelming majority of Republicans just vote to pass the Social Security Fairness Act, which is certainly not fair to taxpayers because it increases benefits dramatically for civil service workers. It's going to add at least $20 billion a year to the debt, but I'm sure it's going to add much more than that. That's just what they say. But this new continuing resolution has another $110 billion in brand new spending on top of their pay raise that they get for themselves. But it also extends the suspension of the debt ceiling. We don't even raise the debt ceiling anymore. We just suspend it so that the sky's the limit over the next 2 years. And you have Trump and Musk encouraging Republicans who don't want to sign a 2-year extension because they want to use the debt ceiling as leverage to exact some spending cuts out of Congress. And Trump is saying, no, let's suspend it. In fact, now Donald Trump is talking about abolishing the debt ceiling completely. So, for all the talk about wanting to do something about the debt, the ceiling is all we got. Not that it's even real because they keep raising it. But if we ran up over 36 trillion of debt with a ceiling, imagine how much more debt we're going to run up without one.
Yeah, so the Republicans have a 1-seat majority as of right now, given, some of the cabinet appointments that Donald Trump's had to pick off from the Congress and so forth. What are the chances that a Mike Johnson actually survives to become the House Speaker nominee for the next year or so because of this debt problem?
I don't know for sure, how to handicap that. But my point is, it doesn't really make a difference who gets the job, because the job of reducing government spending is the one that's not going to get done. The deficits are just going to keep on rising. We're not going to make any meaningful cuts. We may not make any cuts to government spending, but whatever trivial cuts might be made are going to pale in comparison to just the normal increase that we're going to get in government spending. And so anybody who believes that, that we're going to be starting down a new fiscally responsible path, no, I mean, that's just a pure fantasy.
What cuts do you anticipate coming down the pike?
Well, I mean, none. I mean, there could be some, small cuts, which would be offsetting the increase in spending. But I expect government spending to rise every year that Trump is president, just the way it rose every year he was president the first time. It didn't start with COVID. It began before COVID. And the deficits went up every year that Trump was president, and I expect the same thing will happen again this time. I look for the debts to be larger in each year than it was in the previous.
Yeah, I mean, the calling card behind modern monetary theory is that deficits don't matter until they do, right?
That's the problem
Yeah,
because when they do matter, that's all that matters. And,
exactly.
it's kind of like jumping off the top of the Empire State Building and on the way down say, well, there's no problem. So far, so good because, you haven't hit the pavement yet. But once you jump off the top of the building, hitting the pavement is the inevitable outcome. And so we are heading to a crisis, a debt crisis. Just because we haven't arrived there doesn't mean it's not going to happen. And we're not doing anything to alter the trajectory that we're on.
What's going to be the tipping point here, Peter, in your mind? What will finally be the tipping point to where deficits do indeed matter?
Well, they matter. I mean, I think they matter now. It's just that they aren't mattering in a way that it's really manifesting itself in the financial markets, in the bond markets so much, in the currency markets, that it's a big issue. But the economy is weak. The underlying economy is very weak. The voters know that. That's why, a lot of people voted for Trump because of their frustration over their circumstances. And a lot of that is the result of the debt. It's the result of capital that should be going to growing the economy. And instead, it's being diverted to growing the government. And so we're already poor because so much of our capital is being misdirected from productive uses to government spending. It's just that people haven't necessarily connected the dots between the government spending and the fact that the economy is not as good as it otherwise would be in the absence of that spending. But we haven't had the crisis yet where the government can't sell the bonds, bond prices crash, interest rates skyrocket. The Fed, just really cranks up the presses. Inflation goes through the roof. We get a dollar crisis, a sovereign debt crisis. That hasn't happened yet, but it will. It's only a question of when.
So, as government spending as a percent of GDP continues to rise, if you do any of these cuts, what impact will that have on the economy, given that government spending is a huge part of the economy now?
It's a huge part of the GDP, but that's not the real economy. That's just measuring the money we're spending. But in order to address this problem, in order to have more resources available to fund investment in the private sector, we need to take those resources away from government and free them back up. So in the process of doing that, we're going to have a severe recession because government spending is going to have to come down dramatically. Government employment is going to have to come down. So a lot of government workers are going to have to be laid off. And a lot of people who are now getting checks from the government, not just government employees, but people on Social Security, Medicare, whoever gets government benefits, their benefits are going to have to be reduced. And therefore, their spending is going to have to be commensurately reduced. So that's going to have a big impact on GDP. You're going to see a huge contraction. Now, in the long run, that's productive. That's constructive pain. That's what we need to get back on the right track. But because getting back on the right track necessitates that short-term pain, politicians don't want any part of it. That's not how they get reelected, by telling people they got to suck it up, and in the long run, it'll be worth it. Politicians want instant gratification to the voter. They want to tell the voter, I'm going to make your life better right now. Not you have to suffer to have a better life in the future. I will give you that better life right now. And so rather than allowing the economy to correct the imbalances that is undermining it, they just keep blowing air in the bubble.
Mm.
and they just hope it doesn't pop until after the next election.
Now, two leaders, two countries, and these are in the these are in a minority. El Salvador and Argentina with Milei and Bukele, they've managed to cut down on spending, uh, relatively speaking, a lot better than their peers have. Is what things like Milei has done in Argentina? Is that kind of the example that we need to institute here in the United States, or did Milei not go far enough, in your opinion?
Well, I mean, he's going maybe as far as he thinks he can, and we'll probably go farther if he can. But yes, I mean that is an example of what needs to happen. You need to rip the Band-Aid off. And the reason I think that Argentina was prepared for this was because things have been so bad for so long that the public was willing to try something different. Because politicians, socialist politicians, have been promising, to solve the problems that they created with more government programs and more government spending and more money printing. And the population in Argentina is done with that because the false promises don't work anymore because they've been let down. The people have been let down so many times in the past by the same politicians with the same empty promises. So then Milei comes and has a different message. Hey, these politicians are the problem. Government is the problem. The solution to the problem is to eliminate government. We need to cut back on government spending. And even though that's going to mean a short-term recession, that's what we need to get out of this dynamic and get back to real economic growth. And so the public was willing to try it because they'd already tried the alternative and it wasn't working. I don't think America is ready for that yet. I don't think the pain has been bad enough. It's been bad enough to vote for Trump, but Trump did not campaign to do what Milei did. He promised not to cut Social Security, Medicare, Obamacare. He promised to increase spending on defense. So Trump didn't ask anybody to sacrifice anything, and nor did he try to tell the electorate that, hey, we've got to go through this austerity, we got to go through some tough times in order to address these problems. He ran on a populist message that everything is going to be great, that all I have to do is become president, and I'm just going to cut your taxes, and we're going to drill, baby, drill, and it's going to be an immediate boom in the economy. We're going to get rid of inflation. We're going to have tremendous economic growth. Everybody's going to get rich, and nobody has to give up anything. And he even pandered to the labor markets, trade labor unions. I'm going to get you higher wages. I'm going to protect you from foreign competition. He pandered to the Bitcoin and crypto people. We're going to make Bitcoin great. The government's going to buy Bitcoin and prop up the price. I mean, all kinds of nonsense, but all designed to pander. Just same thing with waiters and waitresses. We're not going to tax tips. Union workers, we're not going to tax you on your overtime. Social Security, we're not going to tax your Social Security benefits. Right? Where's all the money going to come from to pay for all these giveaways? Especially when he promised to get rid of inflation. Because if we're going to cut all these taxes, what do you think is going to happen to prices as people spend all that money? The prices are going to go up. So everything that Trump promised is inflationary, yet he also promised to lower or get rid of inflation. So, there's no way to keep those promises.
Can you cut taxes while not cutting spending? I mean,
you can, but then you just have bigger deficits. And so there's a burden there on the economy. Yes, you're relieving the economy of the tax burden, but now you're replacing it with a bigger debt burden. And I would argue that the debt is more damaging to the economy than the taxes, because ultimately the debt has to be repaid with even higher taxes. And if it's not going to be repaid with higher taxes, it's going to be repudiated with higher inflation. But whether you pay an income tax or an inflation tax to cover the deficits, the public is getting taxed. And that is undermining the economy. That is hurting the standard of living of the American people.
What do you see as the potential downstream impact of these tariffs that he's been threatening the likes of the EU, India, China, the BRICS, Canada?
Yeah,
Do you
I
see
mean,
these working or go
tariffs
ahead?
are just yeah, tariffs are just another way for the government to tax the American people. They're not a way to tax China or Canada or Mexico. Americans pay the tariffs. Whenever they buy an imported product, which is most of the products that Americans buy are imported, and so we'll be paying a tax on all those products. The only way to avoid the tariff is not to buy the product. Now, that either means you just go without a product that you otherwise wanted, or you buy some U.S. alternative that maybe isn't as good, maybe isn't as inexpensive as what you were buying from China, but that's all you can afford now because the Chinese product is too expensive. So you buy an American product, but you're still paying more for that U.S. product than you were paying for the Chinese product. So Americans are just going to pay higher prices as a result of the tariffs. Some of that money will be collected by the U.S. government, and some of it won't. But they're not going to make the economy stronger. They're not going to revitalize our American manufacturing. So any more than they did the first time that Trump imposed tariffs. I mean, the trade deficit was bigger when Trump left office than when he got there. Despite the tariffs, and the Biden administration has left most of those tariffs on, and the trade deficit is worse now than it was when Biden took office. We have a record high. So we haven't made any progress. In fact, we just got last week, or not last week, earlier this week, they announced the current account deficit for the most recent quarter, and it was like $308 billion, all-time record high. We've never had a bigger current account deficit in a single quarter than the one we just had. So a lot of that is because of our trade deficit. But the rest of it is the net investment deficit. But we're hemorrhaging red ink as a country, and so I don't think the tariffs are going to turn that around.
Mm. Can't the tariffs be a form of punishment if they end up diminishing the demand side? If consumers are seeing X% increases in prices, they're going to buy less of these products.
Yeah, yeah. I mean, yeah. So if you want to say that Trump is punishing Americans, yes, he's punishing them. He's either punishing them by saying you have to pay higher prices or you have to give up these goods. You can't buy them anymore because you can't afford them. Now, are we punishing the Chinese? Are we punishing, the Mexicans? Well, we're punishing some, but we're rewarding others. So if you're a Chinese company and that you were selling products to Americans, and now you can't sell as many products to Americans because Americans can't afford them anymore, that business loses out on something. But now, what does that business do with the goods that it's not selling to Americans? Well, it's going to sell those goods for a little bit less to somebody else. So the company is not going to lose out on the sales. It's going to lose out on some of the profits because it's going to have to accept the next best offer, right? Americans were giving the best offer, but obviously there's somebody else who would have paid a little less, but didn't get it because, the Americans outbid them. So the Chinese companies will end up selling the products to people in other countries or people in China. Maybe the Chinese will buy the products at a lower price than what America had paid. So the Chinese consumer is the winner, or whoever else gets the products that the Americans can no longer afford. So they're going to be winners from the tariffs. They're just not going to be Americans. Now, to the extent that you're an American company that competes with a Chinese company and you make something similar and you end up selling more of your goods at a higher price than you were before when you had the foreign competition, then yeah, there could be some American companies that win too, but at the expense of, a lot more Americans who lose. Yeah, obviously the government could be a winner, the U.S. government, if they collect extra tax revenue, right? They win. They've got more of our money. But that's not the kind of victory that most people want. They don't want to just get the government to have more money. They want to keep more of their own money.
Right. So you did mention that you see a recession ahead. Could we already be in a recession though? I mean, these things are typically retroactively announced. I mean, by the time
Yeah,
in a lot of cases, by the time the Fed announces it, it's usually in the middle of it, or sometimes it's even over.
yeah. I've been saying all year that I thought we were in a recession, and that's why I was so confident that Trump was going to win, because I thought that in a recession the voters would not want 4 more years by voting for Kamala. But Powell at the press conference on Wednesday again talked about how remarkable the U.S. economy is. They keep talking about this great economy, this strong labor market, ignoring the results of the last election, as if the economy didn't impact these voters, even though the voters told the exit poll guys that they were voting for Trump because the economy was no good. So there's overwhelming evidence, plus with all the recent downward revisions to the previously reported non-farm payroll numbers, that the economy is not good. Yet the Fed is still clinging to the illusion that it is. But yeah, at some point we may find out that we've been in recession for the entire year, and then the Fed's going to have even more egg on its face for having talked about how great the economy was and not even realizing that it was actually in a recession.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys. How can the market kind of have this cognitive dissonance, though? I mean, shouldn't this be reflected in earnings and then therefore the stock price of, downstream as well? But on the contrary, we've continued to make new all-time highs. We did have a bit of a puking session after Powell's announcements a couple of days back. And the Dow has been down for 10 consecutive days up until, yesterday, I think broke that record as well.
Yeah, it did. That was the biggest losing streak since 1974. It would have been interesting if we could have been down again yesterday. We actually were only up like a couple of points. I mean, we barely went positive. The Dow was up about 400 points at its peak yesterday, but it gave up all those gains. And for now, as of right now, the Dow is rallying today. But I don't think the market's out of the woods, because I think it was a real eye opener what the Fed said, I think, for a lot of people. And I think yesterday, even though the Fed cut rates, it really tightened monetary policy. It let people know that fewer rate cuts are coming, and they may not even come at all. We may have to hike rates, because not only is inflation higher than we expected it to be, but it's actually heading in the wrong direction. And that's something I've been talking about all year, as everybody's been talking about how, we're on this glide path to 2%. I've been pointing out that I don't think we're going to hit 2%, because we've kind of run into an impasse around 3%. And that's where we've been building a base, and we're going to launch much higher from that base. So I think next year you're going to see much higher inflation numbers. But I also think we're going to have much weaker economic numbers. So I think it's going to be stagflation, which is the one thing, Powell was asked at a press conference, what's the Fed's plans for stagflation? And he kind of laughed and he said, well, our plan is we just hope we don't have it, because they don't really have a plan. So all they can do is hope that they don't get the one thing that they're not prepared for. But, Murphy has a law, anything that can go wrong will. And we're going to have stagflation, despite the fact that the Fed is hoping to avoid it.
Yeah, it's very interesting. What about gold? I wanted to talk about gold for a second. Gold seems to be cooling off a bit after its record-breaking year we've had in 2024. How do you see gold playing out in 2025?
I think gold's going to continue its uptrend. I mean, it's been trending up, since the beginning of the century or the millennium. It's been outperforming stocks over that time period. I expect that to continue for all the reasons that the trend is there. We have pulled back. I mean, right now we're around 2,630 or so, 2,620. At our peak before the election, gold almost hit $2,800 an ounce, didn't quite get there. But peak to trough, gold pulled back about 7%, which is not, that big considering how much it had gone up. It was up well over 30% on the year. The big decline was in the mining stocks, which actually turned negative on the year. I mean, most mining stocks are now down on the year, even though gold itself is up around 26, 27% year to date. The gold stocks are down. I mean, from their peaks, the big gold stocks fell about 35%, with gold down 7%. So that's 7 times the decline, which is ridiculous. And big companies like Newmont and Barrick are negative on the year. They're down in 2024, even though gold is up close to 30% during this year. And so that just shows you how negative the sentiment is on gold, that people aren't willing to buy these stocks, that they're trading for less than 12 times earnings with a market multiple, PE of more than double that. So you've got all kinds of crazy enthusiasm for tech stocks and cryptocurrencies, and really irrational pessimism regarding gold. So I think that that shows you where the money is going to be made in the years ahead. It's going to be made by the people who go against the crowd and buy the gold, and more importantly, buy gold mining stocks, and people who sell these overpriced tech stocks and basically worthless cryptocurrencies, which would include Bitcoin.
Yeah, I've done some analysis on this as well by just looking at Google Trends data on gold buying and things of that nature. And there really hasn't been any movement in gold buying, at least from a Google search query perspective, which
Yeah, it's
basically
just the
just tells you
central banks. The
it's the
central
central
banks are
banks,
buying.
exactly. So, I mean,
And
go ahead.
they know what they're doing. They're a little bit more sophisticated than your typical mom and pop retail gold buyer.
Yeah, yeah, and you see that reflected in the gold mining stocks because in a retail buying environment, I mean, you would anticipate the more speculative names to begin to kind of to move in tandem with the metal's price, but you don't see
No,
that.
the speculative names have been going down more. That's
Yeah.
what's happening with them. People don't want to speculate. I think part of that is the appeal or the excitement around Bitcoin. I think a lot of
Mhm.
spec money is going there and not into mining stocks. Because, yeah, it is a speculation. These are, especially the small ones. But I think it's a reasonable speculation for people to make. I think Bitcoin is a completely irrational speculation. I mean, you're just speculating on the madness of crowds and the greater fool theory, and the fact that you think a lot more fools are out there, and maybe there are. I mean, it's hard to say, but that's what you're doing when you're buying Bitcoin. You're just making a bet that you're not the last fool, that more people are going to come in because of the dynamic, right? The dynamic of Bitcoin is it's going up. I'm going to get rich if I buy it too. If I don't buy it, I'm going to be left out because everybody else is going to get rich and I'm going to be stuck staying poor. So you've got that dynamic where, it's not just the greed of making money, but it's the fear of being left out and staying poor. So you've got fear and greed pushing people to buy Bitcoin. Now you've got politicians trying to reward their donors by buying Bitcoin. And so that's added another element to the pyramid scheme. If you can, get the government in, because now you've got a committed buyer that is price agnostic. Right? We're going to buy 1 million Bitcoin. We don't care what it cost us. We're just going to buy them. And then if you look at the bill that, the crazy bill that Senator Loomis introduced, after they buy Bitcoin, they're not allowed to sell them for 20 years. So it's like they're just taking them off the market. They're saying we need a Bitcoin reserve. Well, what's the point of a reserve if you can't tap into it? I mean, imagine if we had our strategic petroleum reserve and we said, yeah, we got all this oil, but we can't use any of it for 20 years. Like, what would be the good of the reserve if you
And
can't tap into it when you need oil?
and you've given away all that capital to buy it.
Yeah, you've created a massive inflation. You printed all this money. But again, what do we need a reserve of Bitcoin for? I understand why we need a reserve of oil because we may need oil and there may be an embargo. but nobody needs Bitcoin now. So who the hell is going to need it in the future? And why do we have to have a reserve of something that nobody needs?
Yeah, I think a lot of that ties into some of the stuff that's going on with Bitcoin and Tether and the U.S. Bond market. So they may see it as a ploy to prop up the bond market as China begins to let their bonds mature and
Well, that's if
expire.
we, yeah, if we prop up Tether, because Tether, but the big Bitcoin doesn't buy any bonds, but Tether does. So if we
Yeah.
get people to want to buy Tether or other stable coins that buy U.S. Treasuries, but where does the money come from to go into Tether? It has to come out of the banking system. So now the banks don't have the money to buy treasuries. So it's not like there's just this new source of demand because it has to come from someplace else. If I send money to Tether, I have to take the money away from some other institution that otherwise would have had it. So it's just redirecting the treasury buying. It's not coming up with a whole new source of treasury buying.
Yeah, and much to your point, I mean, it is clown world when you have an altcoin like Fartcoin having a larger market cap. Did you see this? It has a larger market cap than the entirety of the silver mining complex.
Oh, Fartcoin does all by
It
itself?
does, yeah.
Wow. you know,
So, I mean, much
I
to your
remember
point.
I remember there was this girl, I don't know what her name was, but she was selling her farts. Um, she was like, I think she was farting into like a container, and then like a jar, and then she was selling them like to her fans who wanted her farts. But at least that, I mean, you got the actual fart.
Yeah,
I mean,
exactly.
to the extent that somebody likes to smell some girl's farts, at least you got an actual fart. But with fart coin,
It's
you
just
don't have
parts and
any.
name only. It's a fino.
Yeah, that's funny. That's funny. But the look, but the market cap, it's really irrelevant because all you need is one transaction at a ridiculous price, and now you got a market cap. But if nobody sells, and the only reason we have a high market cap is because nobody is selling, then what good is the market cap to anybody who owns it? That's the laughable part about Bitcoin. It's like, yes, Bitcoin's going to the moon, but never sell your Bitcoin. Okay, so if I can never sell the Bitcoin, what difference does it make what the price is? It only matters if I can sell it and buy something. But if I have to just never touch my Bitcoin, then it's like mental masturbation. It's like, yes, I'm a millionaire, but I still live at home with my parents and I don't even have a car because I don't want to sell my Bitcoin to buy one. So I'm basically poor, even though I'm supposedly rich.
I mean, do you remember like at the start of the Ukraine war when they froze all these Russian stocks? And a lot of us ended up buying a lot of cheap Russian stocks thinking that we were getting a good deal. But myself included, I bought a number of these Russian stocks and they've been frozen for about 2.5 years now.
Yeah,
Two and a
I
half
don't know
years is
what's going to happen too if they're ever going to, I still own one. I still own some. We have some of the gold fund. I owned Norris Nickel over there. I had shares of that company. I mean, I'm sure it's a valuable company. I don't know if I'm ever going to get my stock, but on my brokerage account, it just shows that it's worthless
it's the
because
same principle. I mean, if I can't sell my any asset, what good is it? I mean, it's just sitting there. I mean, I have all these high value Russian stocks, but if I can't sell them and tap into that capital whenever I want to, I mean, I may as well. I'd much rather have the money that I spent buying these stocks.
oh yeah,
Like I would
yeah,
have had the money buying any asset that I would never sell.
yeah, yeah. I mean, but with Bitcoin, again, the people who got into Bitcoin early and who are telling the people who are getting in now and who have gotten in recently to never sell their Bitcoin, they're selling their Bitcoin to these people.
Mm.
This is a huge pump and dump. That's really what Bitcoin is. And they got Wall Street involved, and now they've got the politicians, they've got the government involved. So and it really is a shame that the politicians have sold out like this. And Wall Street, what else do you expect, right? Wall Street's going to do anything if it makes them money, right? They don't give a damn if the people buying all these Bitcoin ETFs ultimately lose all their money. All they care about is how many the fees that they make, right? Like the casinos, they don't care that the people in the casinos are gambling and losing. They're winning. The house is winning. But at least the casinos, they give you a nice show. They got pretty girls. They give you free drinks. And, and it's entertaining losing your money, playing, these games. Um,
It's part of the
Wall
process.
Street
It's part of the
ETFs are,
process.
yeah, they're not, you're not getting as good a deal from the Wall Street as you are from Las Vegas.
No, no, not at all. Really quick, I want to take it back to the Dow. Just popped into my head. The Dow is known to be the source of where world capital goes to invest into the U.S. markets. So the fact that the Dow has seen a 10 consecutive day streak of losses up until yesterday, uh, does that mean that effectively the world has lost? Is beginning to lose faith in the U.S. capital markets?
Um, well, not yet. I mean, I think the world should lose faith in the U.S. capital markets. It hasn't, so, but I think it will. I mean, I think it's just a question of time, and it may happen during Trump's term. I mean, because there's been a lot of promises made. There's high expectations. They're not going to get met. I think we are going to stagflation, uh, and I think the Fed is going to go back to quantitative easing. But I think this is going to be happening with higher inflation. So we're going to get higher inflation and a weaker economy simultaneously, which is something that the markets are not prepared for. And so I think that really could be a wake up call. The dollar could really start to drop. Inflation could really accelerate. Gold go through the roof. And, we could have a day of reckoning.
Yeah. Well, one more thing before we sign off here, Peter. What is your game plan for 2025, broadly speaking? Like, what do you kind of
Um,
anticipate?
I'm just following the same plan that I've had. It's been a rough road because they keep kicking the can down that road, and so extending that day of reckoning into the future. But I'm confident that I've got it right as far as what's going to happen, even if it's taken longer than I thought before it happens. But I continue to own the gold, silver, the miners, resources, foreign stocks, emerging markets. I continue to be out of the US dollar, even though, on paper, as of right now, those have not been the winning trades. The best trades have been long US stocks, particularly long tech stocks, the Magnificent Seven, long AI, long crypto, long Bitcoin. You know, I think ultimately the people who are in those positions, if they don't get out of them, which most people by definition can't, and so they're going to end up with huge losses at the end of the day. And I think that I'm going to end up with big gains, even though it's going to take longer to get there. It's like the hare and the tortoise, right? The Bitcoin crowd has got a big lead right now, but at the end of the day, I think I'm going to cross the finish line, and they're going to die of exhaustion or whatever, but they're not going to make it.
Any assets that you see that could potentially be insulated in the event of a market crash?
Well, it depends. If the dollar crashes too, then you'll have gold going up. But if we have a real crash, probably everything's going to go down. But the question is, how long will it stay down? Because the way the Fed reacts to a crash is prints a lot more money. And so I don't know that we're going to have a 1987 style crash, right, where the market drops 20% in one day. I mean, we were down 1,100 points yesterday on the Dow, but that's only 2.5%. That the biggest loser was the Russell 2000 was down 4%, right? We don't, these are not crashes, like a 1929 or 1987. We may get one because the market is more overvalued now than it was, in 1929 or 1987. So, we're vulnerable for a crash, but we may not get one because of the dynamics of the central banks and the Fed in particular as to what they do to mitigate a crash. But what they do is just create inflation. So it's not like, we get it for nothing.
Yeah, the von Mises crack up boom, I think it's what it's called, right?
Well, the crack up boom is really when you have hyperinflation.
Hmm.
Yeah. And we may have that. We'll see. I hope that's the worst case scenario. I mean, I hopefully we don't get that.
Right. Well, hey, Peter, this has been a fun interview. I really enjoyed it. Tell people where they can find you.
Well, I'm on the internet pretty much. You can go to my YouTube channel, Peter Schiff, or schiffradio.com. I do a podcast once or twice a week, Peter Schiff Show. Just did my 1000th episode
Oh,
on
congrats.
on Wednesday. So I've been doing them for a while. And before I did the podcast, I had this daily radio show. And then before that, I had a weekly shortwave show. So I've been kind of communicating with the public for a while now, trying to, give my views on the economy, on the markets, politics. We got a free newsletter that we put out a few times a week. You can sign up at shiftsovereign.com. I also have some premium services that you can look into while you're on the website. If you want to do business with me, Schiff Gold is a gold company. I strongly recommend that people own some gold and silver physical in your possession. So go to schiffgold.com to buy some, talk to the representatives, or just fill up your shopping cart and check out if you don't need any help. If you have a larger portfolio and you'd like to follow my investment strategy and you'd like me to manage your money, you could go to Europe Pacific Asset Management at europac.com, EUROPAC.com. There's a phone number there you can call, or you can fill out a form and one of the representatives will call you. If you're kind of a do-it-yourselfer, on that website, you'll learn about my mutual funds. I have 5 mutual funds: Europe Pacific International Value, International Growth, Emerging Market, Gold Fund, and a Foreign Bond Fund. All of them are available, no load. Schwab, Fidelity, all the big discount brokerage firms have my funds on their platform. So, you can buy them. And then I manage those funds. It doesn't matter, where you hold them. My team, at Europe Pacific Asset Management handles the portfolios. But these are funds that are designed to do well in stagflation. I do well with a weak dollar and a weak U.S. economy. That's where I think we're headed. And I think these are the portfolios that you need to really survive that type of economic environment.
Awesome. We'll have the links to all those down below, guys. So be sure to check them out if you're interested. Peter, anything else you want to talk about that we didn't get to before we wrap up?
I mean, that's good.
Got it. Yep. All right. Well, if you guys enjoyed the content, remember to give us a like, comment down below. Go, Peter, go in the comment section. If you agreed with what Peter had to say, if you disagreed with anything, let me know. I do read the comments. So drop me your thoughts down below. Also, if you want to support the channel, go ahead and hit that subscribe button on the side. It's totally free. It doesn't cost you a thing, and it helps us grow. If you want to support us monetarily, then check out our Substack, capitalcosm.substack.com, where you can get early access and ad-free versions of all of my YouTube content before the YouTube audience does. And so with all that said, Peter, thank you for coming on. And guys, thank you for watching. I'll catch you next time.
Take care.